Hi everyone. Today we are here to present a buy recommendation for Nordic Semiconductor. Our DCF valuation suggests a target price of 295 Norwegian kroner, yielding 30% upside. We believe market has underestimated Nordic on the following three factors: a faster ramp-up in revenues from cellular IoT, Nordic's unique position in environmental megatrend, and a need for new digital solutions due to COVID-19. Nordic Semiconductor is a fabless Norwegian technology company which designs and sells semiconductor components used to manufacture various applications. Nordic is the only company among its peers which offers a full product portfolio of digital connectivity in all three segments: a short range, which is Bluetooth, medium range, which is Wi-Fi, and a long range, which is cellular IoT. This helps them to draw both profit and cost synergies. Our ESG scorecard suggests that Nordic outperforms its peers on multiple ESG factors. Let's take a look at the KPIs. Nordic's greenhouse gas intensity ratio is equal to 0 compared to peer average of 45. In addition, Nordic purchases almost entirely renewable energy, which is 3 times higher compared to peers. In 2020, Nordic had employee turnover rate of only 3%, which is far better compared to Nordic's peers and can be seen as a competitive advantage because retaining talented human capital is crucial for delivering company strategic goals and also continuing building a competitive moat. And lastly, Nordic's insiders hold 1.5 billion NOK worth of shares corresponding to 3% of the company. This can be seen as a skin in the game, convincing us to believe that the company is run at the best interest of shareholders. Overall, we see Nordic's ESG performance to be superior compared to peers, and this might attract environmentally conscious investors in the future. My name is Indre, and now Alf will dive into our investment thesis.
So we believe that the market is underestimating Nordic's ramp-up in cellular IoT revenues. Cellular IoT is expected to become the next technological megatrend, bringing the physical and the digital world together. Due to Nordic's constant communication with clients, their flexible mindsets, and their ability to quickly adapt to changing preferences, Nordic is already growing faster than the market in terms of units sold. By doing strategic R&D investments, Nordic is positioned to gain a significant position within this expanding market. Currently, Nordic uses 80% of their R&D investments in products being launched beyond 2023, giving the company a technological superiority. We believe that Nordic's agility and ability to adapt their products to their clients will make them continue to capture market shares in this growing market. We further believe that Nordic is uniquely positioned in the environmental trend. The environmental trend is expected to keep growing significantly, with technologies such as smart agriculture, smart cities, and smart homes are key drivers for an increase in demand. Nordic delivers low-energy products that outperform their peers when looking at efficiency, and their products have an increased computational capability, enabling a large variety of sustainable applications. Furthermore, Nordic has incorporated the United Nations Sustainability Goals throughout their value chain. We believe that the combination of being ESG-friendly in both their value chain and in their products will make investors look at Nordic and will work as a catalyst for the unredeemed potential in Nordic Semiconductor. At last, we have seen that COVID-19 has sparked the need for new digital solutions. According to Deloitte, investments in digital healthcare in the first half of 2021 surpassed all investments done in 2020, and the trend is expected to continue. Furthermore, we expect that the number of firms utilizing different connectivity solutions will be 4 to 5 times as large as before the pandemic. During 2021, Nordic's order backlog almost tripled. Nordic has developed strong supply chain relations, and given the wafer shortage in the industry, we believe this gives the company a short-term competitive advantage, as they have secured supply until the end of 2023. COVID-19 has created a long-term opportunity for the semiconductor sector, and due to Nordic's strong supply chain relations, we believe the company is in pole position to further benefit from this. Now, David will show you how the investment thesis is incorporated in the financial projections.
We estimate Nordic's revenue to grow by a CAGR of 18% for the next 10 years. This will be driven by an increase in demand for Bluetooth Low Energy and new revenue streams. This comes as a result of energy-efficient solutions, R&D spending materializing, and synergy effects. Nordic have not only cemented themselves as market leaders, they have also positioned themselves in the segments with the highest expected CAGR within IoT. These are expected to have a CAGR above 30% the next 5 years. With the chips being of a higher complexity and their continued position as market leaders, we believe Bluetooth Low Energy will power revenue growth. They have secured deals with top-tier clients where the volumes are larger, and we therefore expect the growth from this segment to materialize earlier. As the company is expected to significantly increase the revenues, they are well positioned to take advantage of the economies of scale. By having more big clients with large volume, we estimate the SG&A margin to decrease to about 9%, and by having R&D investments materializing in cellular IoT and Bluetooth Low Energy, we expect the EBITDA margin to hit 25% by 2030. Nordic has been lagging behind peers when it comes to EBITDA margin, but with the R&D investments finally materializing, we expect them to finally close the gap. Historically, Nordic has had superior profitability compared to peers, and we believe this will continue. By being able to take advantage of capital has been invested in the past, we expect both the ROA and the ROIC to increase and outperform peers in the future. Driven by the growth in revenue and strong EBITDA margin, we estimate the EPS will continue to grow at a CAGR of 24% for the 10-year period. We issue a buy recommendation for Nordic with a target price based on a DCF analysis. This model fits Nordic's growth profile well, which accounts for a rapid ramp-up and a stable growth phase. With a cost of capital of 7.7% and a terminal growth of 2.5%, we arrive at the target price of 295 NOK, which accounts for a 30% upside. Although the terminal growth might be conservative for such a growth company, this might indicate an even higher share price beyond our estimates when accounting for Nordic's superior technology and new revenue streams materializing. Next, Christina will take us through the relative valuation.
So the relative valuation confirms our buy recommendation. We compared Nordic to 3 different peer groups: Silicon Labs, which is their closest peer, high growth peers, and other semiconductor companies. Due to Nordic's strategic R&D investment, complete product portfolio, and sticky order backlog, we believe they deserve to trade at a significant premium compared to Silicon Labs, which is why we added a 20% premium to the EV/EBITDA multiple. Based on this, we get a target price of 262 NOK, a 15% upside from the current price. In addition, we did a scenario analysis illustrating a huge upside potential. In the bull case, we obtain a price of 375 NOK, a remarkable 65% upside. In order for Nordic to capture this, we believe they need to fully utilize the synergies between their short, medium, and long-range products. Contrastingly, the bear case displays a limited downside of 19%. Next, we did a Monte Carlo simulation, further reiterating the limited downside. In 72% of the simulations, we obtained at least a 10% upside to the current price. As a fabless company, Nordic is exposed to supply chain risks. TSMC, their main supplier, accounts for half of the world chip production, situating Nordic with low bargaining power. To mitigate, the EU has proposed to invest 43 billion euros into increasing Europe's share in the global chip production. So to summarize, we issue a buy recommendation for investors that are looking for a definite buy. Nordic Semiconductor is a no-brainer. This concludes our presentation. We're now open for questions.
Thank you very much. Very good presentation. And yeah.
Yeah, if you might.
Nice.
Yeah.
Yeah. Okay, then I'll start with a few questions. I want to hear a little bit more from you on the competitive advantage of Nordic. Why are they able to have 40% market share in global design wins for Bluetooth Low Energy, in your opinion, and how sustainable is that?
Yeah, I can answer that question. If you please could go to slide 7, just press the 7. Yeah, thank you. So I will link that question back to our investment thesis. Firstly, Nordic does strategic R&D investments, making sure that they always stay ahead of the technology, giving them a technological moat. As also mentioned, Nordic's products have an increased computational capability, which enables a large variety of sustainable application. This is perfect for platform ecosystems, like, for example, smart agriculture, smart cities, smart homes, which will drive an increased demand. And last, we see that due to COVID-19, there's been a wafer shortage in the industry. However, Nordic has what we would like to define as a sticky order backlog. In that term, we mean that Nordic develops their products together with their clients. So it's not easy for a client of Nordic to change the company. So we view the order backlog as a certain future income. And that's why those 3 reasons together is why we believe they will manage to stay ahead of their competitors also in the future.
Great. I'm going to touch upon the order backlog. I'll do it in 2 questions. You say that it's sticky, and maybe you're right, but have you given any thought to the risk of double ordering? Obviously, there's been a global chip shortage, people ordering more than they need. How do you account for that risk in your investment case?
So I can answer that. If you go to the supplier of Nordic, right down, further down there. So obviously there is some risk associated with TSMC being such a big player in the wafer production, because they account for over 50% of the wafers. However, Nordic has positioned themselves with having or placing early orders, and also having long-term relationship. They also have other suppliers that they can cooperate with. However, we see that there is a risk in the industry, and we think that long-term, the EU Chips Act with the investments into wafer production will help as well.
Good. And the second part of the question would be, there's obviously a very strong underlying organic growth for Nordic's products, but we've seen superior growth in the past year and a half. In your modeling, have you made any assumptions for the risk of kind of a slower period following this massive boom in demand, way above the underlying very strong trend?
Yeah, sure. If you can go to the revenue by segment, please. Alf, can you?
Yeah.
Yeah, so this is how we model it for now, where you see kind of how much of the Bluetooth will actually be a part of the revenue, and then you see will that decrease. Now, we've also done a margin scenario where the margin decreases, and a bear scenario where you see that growth is not as big. However, we see that the downside is about 10%, and there is a downside risk, but we still deem them as a very competitive advantage company. We see them as having the ramp up in cellular IoT, and we deem them to the risk to be quite low. Although we haven't accounted for it, but we still feel that they will succeed.
Good. I'll pass the mic.
Maybe I have a question on the governance side. Could you speak about the shareholder structure of the company?
Yeah.
You want the top 20 shareholders? What slide?
Yeah.
This one.
And yeah, maybe shareholder base instead.
Okay. Sorry.
Yeah.
That one.
Yeah. So Nordic is held by 94 institutional investors, and they own above 50% of the company. Then Nordic's insiders, as I mentioned before, hold about 3% of the company, which we see as a big competitive advantage, and which also signals a very positive sign to the investors. And the 5 main shareholders, as you see in the slides, this is a list of 5 main shareholders.
Thank you. And maybe on the revenue side, you mentioned synergies between short, medium, and long-range products. So could you explain how you factor that and how the company can potentially capitalize on this?
Yeah, maybe David
Yeah,
can
sure,
answer.
I can answer that. Yeah, I don't think we need a slide. The thing is, when we calculate revenues for Wi-Fi and for cellular IoT, we know that at least Wi-Fi and power management tools are things that the customers had asked Nordic about before. Therefore, we took circa how many % of the customer we believed would buy the product, and then we factor in how much we see the revenue grow over the period.
Great. I want to ask you your reflections on the recent share price development, both on the way up last year and the massive correction this year. What's your thoughts on both the move up and the move down?
Yeah, I can answer that question. If you go to stock performance, the one on the top there. Thank you. So this was updated last week. Maybe I have my sound a little bit down. Thank you. So you see the development last week, month, year to date, 1 year, 3 year, 5 year. As you see, Nordic severely outperforms their peers. When looking at the recent development, we are seeing a sector rotation due to increasing interest rates, increasing inflation, which is a macro risk. This affects all companies, not only Nordic, which we also see on the 1 month or year to date performance. However, this is a short-term view in our eyes. We have incorporated it in our WACC with increasing the risk-free rate. But this does not kind of ruin the long-term fundamentals. So kind of to summarize it, this will affect all companies in the semiconductor sector, but it will affect Nordic the least.
Good. Have you given any thought to in your valuation to the probability of the company being acquired at some point?
Yes, we do have a slide on that.
Nordic as an M&A target.
M&A target.
Yeah.
So what we've seen is that ST Microelectronics, they were considering acquiring Nordic a bit back. And this made Nordic's share price react in a positive way, increasing by 11%. We also think that since they have big tier 1 clients, that they might be interested, since the stock price has declined, to get some integration into their business.
And just to add to that, we recently saw that Intel Corporation bought Tem Tower Semiconductor, an Israeli semiconductor company. Although it's not really all perfect comparable to Nordic, we see that top-tier clients are looking into buying smaller clients or smaller companies like Nordic. This led to during the day of the announcement, Tower Semiconductor was up 51% and ended up 39%, which is quite a premium. So we see that, I have to repeat just what Christine said, if Nordic further decreases, Nordic is a potential M&A target for top-tier clients, which will lead to a premium for shareholders.
Great. In terms of the long-range investment in the cellular, it's probably very difficult to make assumptions. What are the risks of the cellular investment not really materializing as expected in your book?
Yeah, I can answer that. If you go to Porter's 5 forces, it's there. So I think we can associate it with the threat of substitute products, and we see that as very low. And that's because Nordic does, as I said, strategic R&D investment. So they're always trying to be in front of the market, finding the next technologies. We're one of the first companies expanding into cellular IoT which is expected to become the next technological megatrend. And by history and also the strategy of the company, we view it as not likely that the company will fall behind. And also like to reiterate.
Thank you very much.
Yeah. Thank you so much.
Thank you.